Ray Dalio has spent the last 50 years as a worldwide investor and has concluded that we are frequently taken aback by events that have never happened before in human history. For this reason, he has been identifying several recurring trends sparked by economic downturns, political upheaval, and the international conflict. And so, welcome to Investing Path. And for today's video, we will be talking about Ray Dalio's recent prediction in which he believes that we must expect for a more frightening recession to come. So, make sure to watch till the end. Now, before we go on, make sure to hit the like, subscribe, and bell button to stay updated for more of our future content while you're at it. But besides that, let's get started. Recently, and in terms of the economy, you can see that the United States is borrowing and spending more money than ever before, and our ability to print money is limited. Therefore, we're doing it a lot. First, since selling bonds has very terrible returns, negative real returns. If the government borrows money due to spending more than it receives in tax revenues, to fill the gap, the Federal Reserve can either raise interest rates, which slows the economy and harms the markets, or create money, a practice known as debt monetization, which leads to an inflation of goods, services, and financial assets. As for Ray Dalio, he believes that all of these are markers of the internal order. Apart from the external threat posed by terrorism, the domestic threat posed by the United States' ongoing civil war is of greatest concern for all of us. He added that it really couldn't be easier. If you are financially stable and bring in more money than you are spending, you'll be able to take care of most problems in the past. Borrowing and spending is popular among those in power because voters care more about direct benefits than about the government's financial health, especially when those benefits are substantial. Borrow money, spend it, and let someone else deal with the aftermath. As a result, you'll be receiving a sizable inheritance. The requirement to disperse and generate a great deal of debt is a recurrent theme. What bank did borrow those funds from? They were sent by the government. Although government agencies are responsible for issuing checks, they are incapable of creating currency. Monetization refers to the process through which the central bank creates money and then lends it to the government. Near the end of a long-term debt cycle, when much more debt is created and then monetized, new concerns arise. On the other hand, Ray Dalio suggested for us to figure out what is really going on there, so you can recognize the precursors of more serious problems. Bonds will always provide a negative return in relation to inflation if there is a high demand for selling bonds at a low yield. When the government needs to issue a lot more debt, investors have to buy a lot more bonds since inflation index bonds yield less than 1% and there is no return. This is true not just for American investors, but for worldwide investors as well. Demand for bonds will be insufficient. However, he mentions that what we are witnessing now is what occurs when that happens. Interest rates rise and the central bank has a predicament. This is typical behavior at the close of a cycle. The central bank faces a difficult choice. Either interest rates will rise significantly, or they will have to print money and buy those bonds to hold them down. What's alarming is that if you start losing money and others are losing money by keeping bonds, and that's not just Americans, those are other foreigners. This is because real rates are lowered, which accelerates a depreciation of the value of the dollar and boosts inflation pressures. Then they might sell bonds, which could create a problem. If they do so, at the same time, the government needs to sell a lot of bonds. That's the traditional sign of a long-term debt cycle. If the economy were a person, it would have a slowing heart rate. After seeing a decrease in pulse rate, doctors rush in to administer an injection of stimulant. Since the economy and inflationary pressures have recently shown signs of improvement, policymakers are under less of a time crunch to apply stimulus if and when the economy experiences a downturn. As interest rates rise, it is one thing for the price of bonds to fall, but when those losses are passed on to stock prices, the financial asset price declines are only the beginning. The Federal Reserve may be able to withstand a stock market correction of 10 to 15%, but once it begins to have a noticeable impact on the economy, the true trade-off will become apparent. So that's how it looks. It is not an easy thing to change because what do you do? Spend less money, and if you spend less money, you give less checks out. And you can easily get people to earn more money and change that. It is a difficult dilemma, and he knows that it's a particularly difficult dilemma, and that we will especially see this in the latter half of the year and beyond. Due to the fact that by the end of the year, we will have seen that everything has a problem. As a result of increased growth, inflation, and the likelihood of insufficient demand, Ray Dalio sees that interest rates are more likely to rise. According to him, if you see the need to buy bonds at a time when the economy is booming and inflation is high, that's a red flag. After this year and for the foreseeable future, budgeting is sure to be a hot political topic, and if lawmakers can't agree on how to spend the money, they'll be forced to resort to deficit spending. There may be repercussions for the dollar's value and interest rates as a result. So, Ray Dalio has made it clear that we are accustomed to one form of inflation, which occurs when the economy is overheated and there is a capacity restriction, causing prices to increase, unemployment rates to fall, and so on. When there is too much inflation, inflation rates grow even while the economy is weak. This is known as a stagflation, and it can be avoided by reducing the money supply. You can witness this shift away from bonds and cash into other investment assets like equities, gold, foreign currencies, Bitcoin, and the like. On the other hand, monetary inflation is a serious possibility. He also added that if more people want to sell their bonds than are willing to buy them, monetary inflation is a real possibility. Likewise, paper currency and the necessity to print it extensively are useless. It appears risk-free, but in reality, it isn't because of the taxation that occurs when the interest rate is zero and the inflation rate is 2% or greater. Your purchasing power decreases by around 2% per year, which is a significant amount. Your ability to spend money decreases significantly. Therefore, in such a setting, Ray Dalio says that it would be unwise to keep large amounts of cash on hand. Rather, you would do better to borrow the money and invest it in something that offers a higher return than 0% or that is subject to inflation. You would do better to buy the median item, which is increasing in value by 2% or more annually. Still, diversification is something else you need to work on. If you can afford to keep a large amount of cash in hand, it is time to diversify your holdings among a wide range of asset classes, geographies, and currencies. For this reason, Ray Dalio prefers to put his money into competitive countries where wealth is only redistributed rather than destroyed. Asset classes, governments, currencies, and so on all compete with one another and fluctuate. So, when Ray Dalio considered that and says something like, let's say if you take a 60-40 stock bond mix or if you choose stocks, considering how little we actually know and how difficult it can be to predict future events with any degree of accuracy, he believes that diversification should be our first priority. It is not like one thing is inherently superior to another. So we should be humbled by the fact that markets are relatively efficient in making those comparisons. But so far, what do you think about Ray Dalio's thoughts so far? Do you think his reasons are right for believing that America is in it for a horrifying financial crisis? Or is it something that we should not worry about for now? Let us know your thoughts in the comment section below. But besides that, we thank you so much for watching. This is Investing Path, and if you learned a thing or two from this video, then go ahead and hit the like, subscribe, and bell button to see more of our personal financing and investment news and updates for you. Thanks again for watching, and we'll see you soon.